Good afternoon, ladies and gentlemen. Welcome to our virtual investor briefing. I'm your host, Rachel Curlew, Assistant Vice President of Investment Banking. Today, we'll be discussing Supreme Ventures Limited year-end result alongside Gary Peart, Executive Chairman of SVL. Also on the panel is our Executive Chairman, Mr. Christopher Berry, and apologies, our CEO, Patrick Bataille, will not be able to attend today's investor briefing. Welcome, gentlemen. Glad to have you all here. If
Hi.
you're a fan of the content, then don't forget to hit subscribe. Also, hit the bell to stay up to date with the channel. We upload content like this every week. If you're looking to embark on your first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media to learn more about how you can get started today. And don't forget, we have a Q&A segment at the end of the program, so make sure you submit your questions so we can address them at the end of our discussion. And with that said, let's start today's discussion. Again, we're looking at Supreme Ventures performance for the year ended December 2024. Great. So SVL reported a 4% increase in total revenues, rising to 52 billion from 50 billion last year. This growth represents a 1.7 billion increase despite a 1 billion revenue loss due to Hurricane Beryl. Drilling into revenues a bit on the second slide, we're seeing where the lottery business remains relatively stable year on year, with revenues at about 22 billion and continues to be the largest contributor to the group's revenue. PIN codes posted a 10% growth year on year, and sports betting showed positive growth as well, though at a smaller pace of 3%. Now, going back to the P&L, direct expenses for the year increased 3% to 40 billion, which resulted in a 5% increase in gross profits for the year, reaching 12 billion from 11.8 billion in 2023. Total operating expenses rose by 8%, reaching 9 billion, which management indicated is driven by ongoing investments in SVL's growth initiatives, both locally and internationally. Following a 200 mil decline in other operating income, operating profits for the year declined 8% to 3.5 billion from 3.9 billion back in 2023. We're also seeing here where finance cost increased 44% or 267 million. After factoring all these expenses, the company's pre-tax profit for the year decreased by 18%, standing at 2.6 billion compared to 3.2 billion in 2023. After taxations, net profit amounted to 1.7 billion, down 665 million from the 2.4 billion last year. As a result, earnings per share dipped to 68 cents, down from 92 cents in 2023. And for the December quarter alone, we are noting that the company reported a net profit of 74 million, but this represents a 78% decline on last year's Q4 numbers and probably one of their lowest quarterly results we've seen in a while. We can actually visualize this better on the fourth slide, where the column in green represents profitability for the quarters, highlighting this, as I mentioned earlier, the lowest quarterly profits in the 7 years, or I don't know, possibly longer. But from the graph, it's clear that Q4 profits are generally lower than other quarterly profits, which may result from year-end adjustments. But on average, I'm seeing here that Q4 generates over 400 million in quarterly profits. So I definitely want to understand what's going on here. So that would be probably my first question to Chairman Peart. But despite these challenges, the company remains in a solid position with total assets growing to 21 billion from 20 billion in 2023. Shareholders' equity also increased to 4.6 billion from 4.2 billion, while liabilities rose by 4% to 15.7 billion. The company continues to generate healthy cash flows, throwing off about 1.7 billion in cash from operations. So it's a fairly cash rich business with a fair amount of leverage. The SVL stock price is now trading at $19.49 with a PE ratio of 28 times compared to the main market average PE of 9 to 10 times. So this may suggest that the stock is a bit overvalued. So I'd love to hear from Chairman Parrott regarding the strategies in place to drive growth and to bridge this gap that we're seeing between current valuation and the market expectations. We are seeing where the stock reached a 52-week high of $26.77 and a low of $18.70. But I'm particularly interested in when the stock will hit $30 as it did in March 2023, that peak we're seeing on the slide right now. But overall, the company is in a great position, having successfully grown revenues to 52 billion. It's important to appreciate that a 1% growth in revenue equates to approximately 500 million, which highlights the scale and impact of the company's growth. So it's a solid company with a market cap of over 51 billion, and I remain confident in the stock, and I'm sure Mr. Parrott will strengthen that position as we go through the Q&A segments. And with that, now we can actually go straight ahead into the Q&A segment. So, Mr. Parrott, first question from me. Let me just adjust this gap. So, despite a 4% increase in revenues for the year and a 14% rise in revenues for the quarter, SVL reported a 32% decline in profits for the year. Can you explain what's happening here?
Yeah, sure. So good afternoon, everybody. We'll probably look back in 2024 and actually say that's the year that SVL made its turn to move to higher heights. So 24, the group suffered from a variety of different things. Number one was the hurricane. And so, you had a hurricane, you had a tropical storm. Why that's important, it impacted the group in several different ways. So, as I go through the main revenue generators down to the subsidiary generators, our lottery business, was impacted in that there are a lot of our retailers that were down for a period of time. I think in terms of lottery, we've finally gotten back to, I would say, within 5% of the retailers that were open before the hurricane. We're still not back to the full complement that we had. And so it impacted there. So it's actually a very great performance that the top line revenue beat last year, even with that impact on Beryl. So, but in the instance of the lottery, how the company is impacted us, foregone revenue, that's $1 billion plus that we refer to in my statement. But there are certain other areas in the business that, we were explicitly impacted. So, we have our gaming machine business, SVL Routes, and, their largest concentration of machines were actually in the two most impacted parishes for the hurricane, which was St. Elizabeth and Westmoreland. As we speak, they're still not back up to their full complement. I would say they're back to about 70-80%. But for, I would say, about 3-4 months, they were operating below their optimum because of what had happened with the hurricane. And then the big monster, came on us track. Whilst the team there had to be complimented in terms of how quickly they were able to get the track back up and running, the fact is that the distribution was impacted. And then also, the punters were impacted in terms of their disposable income. That was the burial hit. Most of the other businesses started to come back online. Unfortunately, the big drag, if you look in the subsidiary numbers, we're carrying we lost $400 million last year in Caymanas. And that's actually my biggest disappointment, because every year we pump so much resources into Caymanas, and, I'm getting the feeling that, it's just one hand clapping. You know, Caymanas is not just there for Supreme Ventures. Caymanas services in excess of 40,000 people in terms of what they're doing. We have stakeholders there who are just, I'm not sure they fully understand and appreciate what SVL is doing there. It's not just about purses; it's about the capex in terms of how you build out the business. And then the biggest beneficiary of Caymanas has been the government of Jamaica. Since SVL has taken over Supreme SVREL, which is Caymanas, the horse racing industry has been a net positive for the government of Jamaica. The government of Jamaica benefits from the taxes from the losses that the owners of racehorses generate. A lot of those owners don't record it in a way where it's tax deductible, so the government benefits from that. My calculation, that's around $800 million. That's a saving to the government. Plus the fees to BGLC, the fees to JRC, and one of the biggest impacts are unclaimed winnings. When people win and they don't collect those winnings, those monies go back to the government. So what you have is a net positive to them, and I think, for a private sector company to step up to be working in an industry like this has so much of an impact from a social perspective. It's time the government actually puts a foot forward to help and assist. It's not just helping a private sector company, it is actually helping an ecosystem of over 40,000 people. What I can say to you is that the larger shareholders of SVL cannot afford to lose $400 million a year out at Caymanas. And so there are drastic changes that are going to have to happen. As I indicated in my chairman's statement, if we don't get assistance, the viability of this industry and the track as a whole is going to be put into question. We have been asked to carry a very heavy load. As executive chairman, I'm putting a plea out there to the government. We need assistance, we need help. And along with other stakeholders, we would appreciate any help that comes along. So we pay over $300,000 worth of rent. We do a whole bunch of stuff. We're upgrading the plans. We're not landlords. As I said to people, how do you rent a house and then turn around and build two houses on top, two rooms on it, and it doesn't belong to you? So I think, given all that we've done, we've brought international attention to horse racing. We have a relationship with Naira that comes here, it benefits in tourism. SVL has done so much, for horse racing. And, right now, after a year like 2024, the burden is getting a bit large for us. So, we need some help, we need some assistance. And the biggest stakeholder out there that can help and assist is the government. And, we look forward to talks with them on that. So that accounts for the majority of the fall off year-over-year profit in terms of Caymanas as a subsidiary that has lost $400 million. But we have some other subsidiaries that we've been carrying. In the company, we see these losses actually as an investment. And so I speak primarily of SV FinTech. And SV FinTech is where we have been, building a lot of our software programs. So we have our own proprietary phone card program, that's called ChargeUp. We have our own proprietary bill payment. We have our own proprietary remittance. We have our own proprietary microfinance, and ultimately we have a wallet in SV FinTech. Each of these different lines of business required and have required a lot of different things to get them up and running, which have been kind of fundamentally outside of our control. Over the last 3 years, since we have strategically moved in this space, we have lost in excess of $700 million. But as I said, we see it as an investment because that is what is required to get these businesses up and running. So for 2024, we took different provisions against the software, etc., because the software is built to generate a certain amount of transactions. And if you don't have the transactions running through, then the value of that proprietary software is not what it should be. In addition to which, you ramp up the businesses, with staff, etc., and you don't have the revenues coming on board. The good news is that as we speak, our phone card business is now break even. We expect that to be profitable for 2025. We have finally gotten the four major bill payment companies, which should be Flow, Digicel, JPS, and Water Commission, on our platform now. So we'll be moving towards the second quarter of rolling out that business and marketing that business aggressively. We actually go into the marketplace with our bill payment within the next 2 weeks, so we're happy about that. Our remittance, we had our approval renewed. We're now in a position where we can expand the different distribution points, the different number of people. We're out there seeking places to get approval. We expect to be up full and running with the remittance by the third quarter of September, meaning we currently are accepting remittances, but it's really for our 6 company-owned stores. We expect to roll out to get up to about 200 by next year, 200 different locations. By September, we should have in excess of 100 locations, and we'll be driving that business. Our microfinance business, we're going to merge that with our standalone microfinance, which is Michaela. And so that on its own will be making its own money. We have our wallet that we're going through the process of getting those approvals. So that will be the main spend that doesn't have revenue this year. But we expect to get to a point where we seek approval or get approval by the third quarter as well. So what you have is a subsidiary that loses about $200 to $300 million a year that for the first time is likely to break even and have a small profit. And, as I go through the business, what you will see is that the majority of subsidiaries that last year we had to take provisions and had to get losses against them. For 2025, for the first time, they will be contributors. So we expect 25 to be a much better year than last year. And as I indicated, when we look back, 24 is going to be seen as a year that everything turned. And, we expect all our strategic initiatives to come together, or at the very least, the market will begin to see the benefit of those strategic initiatives coming together. And when they do come together, the growth will be exponential, because what you will see with the software improvements, you will see a reduction in costs, you will see a dramatic increase in revenues, which ultimately leaves you with good profits.
Great. Wow. A lot to digest here. So
Yeah.
just to summarize, so you've now gotten your BOJ's approval. That should be coming on board in the third quarter of this year. You're on
So
track.
we have approval for remittance, and that now we are now allowed to take on third-party locations. And so we expect to get up to our ideal number by September, which is the third quarter of this year.
Okay, which is 100 locations, and your overall target is 200.
Yes, 200 by next year.
Great. And you have signed contracts, or you've completed negotiations with all major utility providers, and that should come on stream in 2 weeks' time.
Yes, so we have signed contracts, and we're looking to roll out that business, which is our bill payment business, on our proprietary software within 2 weeks.
Great. Oh, a lot of things happening for the in the fintech space. But
Yeah.
I want to I want to move back to Caymanas Park. So I know you are working on transforming the park into a multi-purpose entertainment venue to diversify some of the
Yeah.
revenues. I know you have, ongoing discussions with the government, but can you give shareholders just an indicative timeline of when you think SVL can unlock the full potential at the park?
Well, I can't give a timeline because that is totally in the laps of the government. What I can say to you, I don't think the government is hostile to our vision. As a matter of fact, I believe the key ministers support the vision, but it's a process of how you get there. What people need to understand is that, across many jurisdictions, horse racing is a declining business. One of the largest owners of racetracks in the United States is the Stronach Group. And, in the last 2 years, they've closed 2 racetracks. And, they've indicated in the last couple of months that the popular Gulfstream Park that is in Fort Lauderdale, they are expecting to close that to the back end of 26 going into 27. So there are not many racetracks where people are investing in. and Supreme is doing that. Supreme is making some significant investments. But as I indicated before, it can't be just us alone. More importantly, when we look on what is required to bring, the racetrack to profitability, it can't just be horse racing. And so the example I give people is that in horse racing, I have 365 days of expenses and I only have 88 days of revenue. So for me to balance that, or for the team to balance that, we're going to have to find more revenue generating days. And one of the areas that we think can generate that revenue is putting together, for want of a better word, an entertainment park. But again, we can't do this on our own. And it's we have within the SVL group, we have so many opportunities to make material returns on the capital invested that Caymanas is not going to be the first place to put that capital, right? But we understand what Caymanas can do, and between ourselves, the other horse racing stakeholders, and the government, I think if everybody comes together, I keep using the word harmony. If everybody comes together and understand what is required, the benefit is not only going to redound to SVL. As a matter of fact, the majority of the benefit would not redound to SVL. It will redound to the other stakeholders, including the government. So it's kind of difficult. I mean, we need some help. You can't just expect us to be holding this thing all for ourselves. So the entertainment suggestions that we've put out there, we are willing and ready to make a presentation to any government entity, to any stakeholder, because we think it makes sense, but we can't do it on our own. So we invite the stakeholders to come on board. We're not interested in just talking. We're interested in putting up money, and we have invested in excess of $4 billion into this venture. So we need some help.
Yes, and with the government earning, I think you mentioned 800 million in savings plus the unclaimed winnings. I trust that. The government will come to
Fees to the regulatory agencies, etc. They're the huge beneficiary. I mean, there was a time where the track was a big drag on them. They're a huge beneficiary at this point in time. Plus the rent that is paid in US dollars. During COVID, we paid the rent. We were allowed to pay it late, but we still had to pay the rent. We didn't even get a reduction in rent during that period of time. So we've done our part, right? We've more than done our part. Our contract asked us to spend $500 million. We'll spend significantly more than $500 million, right? So we're going to be. I don't think it'll be prudent for the shareholders of SVL for us to continue to invest at this rate in an enterprise that benefits so many other people that really needs to put some of their capital on the table.
Yeah, and I trust the government will come to that realization very soon and will come on board, hopefully by the end.
And even if they don't come on board, take some decisions that allow us more latitude to do what we want so we can get a better return on capital.
Yes, agreed. Mr. Berry, I'd like to throw a question out to you.
No, you can't throw a question out to me. I'm on the questioning side.
Oh, do you have a question though you'd like to ask Chairman Peart?
Yes, I do. So, Mr. Parrott, I hear you talking about bill payment and remittances, and this seems like a very old school thing. A lot of people doing it already. Is this just another Me Too thing? Why are you gonna make any money doing that? Lots of people doing it already.
So that's a good question, Chris. But in my presentation, I kept making reference to proprietary software. So one of the points I'm making to the shareholders is that the losses, whilst there have been a lot of losses in fintech, the majority of those losses have come primarily from the development of the proprietary. And I think that's what's going to make the difference why it's not just a Me Too. I think the software that we have will generate significant value, not just for SVL, but also for the consumers who use this software. Just to remind people out there, every single lottery solution that we have terrestrially we actually have it digitally as well. We see the future as digital. We see the future of SVL as a business that will not only be digital in the gaming space, and we think it's an opportunity for us to expand in different areas. Hence, these particular companies that we speak about. I think the term that is used, these are on. If you distribute terrestrially, these are low margin products. But I think if you develop your own proprietary software, you can create significantly greater profits because of what digital brings to the table. So, for obviously in a public forum, I can't speak to a lot of the key advantages that we have digitally. But fundamentally, that's the answer to your question, Chris. We think we can do it because we can add significantly more value than the customer is getting right now.
Okay, thank you for that. And we noted for the year that your finance cost increased year on year. I'm assuming, that funds would have been additional indebtedness would have incurred to grow whatever investments you were mentioning.
Yeah.
What measures are in place? I'm assuming, you've now completed all these investments, or if not, how can we expect finances or debt to grow rather for this year, 2025?
We don't expect the interest costs to grow larger in 2025. As you rightfully said, we've borrowed money to expand the business. And SVL is a very unique creature. I mean, we're probably one of the few companies in the world with a 90% dividend ratio. And notwithstanding a 90% dividend ratio, we've found a way to grow in different markets and in diversify the product. As indicated, you took write-downs, provisions, etc., because you're not generating enough revenue on a lot of these different platforms. Yeah. And so for 2025, as I've indicated, we're at a point where a lot of things are now back in our control, and we can now start to generate substantial additional revenue on the back of these platforms and these approvals. So with that said and done, the cash flow should increase significantly or materially, where we can start to look to start a process of paying down some of these loans. We did a lot of treasury management to the back end of 24. So for example, one of the things you will see is that when you look at our nominal current ratio, it is below 1. And the main reason for that is we have a $3 billion bond that matures in October 2025. As you know, once a bond or a loan has less than 1 year to maturity, you have to move it from long-term liability into short-term liabilities. Mm-hmm. And obviously that would have impacted our current ratio. So the option that faced us in September of last year is, do you go to your arrangers and refinance this debt so it doesn't fall into current liabilities? And so what management did, the arrangers et al. Were coming back and saying, if we refinance this bond, we'd have to pay about 15% interest on the new bond. But the existing interest rate on the bond is 7%. Mm-hmm. So management took the decision that, listen, we wouldn't refinance as at last year. We would actually wait until this year before we do the refinance. Because we know that from an accounting perspective, you would put that $3 billion into current liabilities, even though you plan to roll it. We went and got the necessary waivers from the other bonds that we have, which we have received those waivers. And so even though you see the current ratio below 1, if you back out the principal of $3 billion, you will see that the current ratio is above 1 and is pretty healthy from a cash flow perspective. The option we took has worked out. Because as we speak, if we wanted to refinance the bond now, we're now getting quotes of 10%. So to put it in perspective, if we had rolled the bond in October of last year, we would have been paying almost $250 million more in interest. Where we are now, if we choose to refinance now, the additional interest is about $90 million. Depending on how we see the rest of the market going forward, if we think interest rates can come down a little bit more, we'll wait a bit longer before we roll it. But our arrangers, we have offers from at least 3 different financial houses to roll the bond. So we're pretty confident in being able to roll that. So as management, we're trying to get the best deal so as not to increase that interest cost. So that's in terms of managing the specific bond itself. But ultimately, we seek to reduce the overall debt load based on the increased cash flows that will come this year, as a lot of these other entities that weren't generating revenues start to generate revenues.
Okay, great. So just to expand on that cash flow, so you have indicated that the group was expecting some increased cash flow from operations. You did declare a dividend of 7 cents for the Q4 quarter, down from 30 cents, I believe, back in the March quarter. You signal, you want to repay some debt, manage that leverage. What about dividends for shareholders?
Well, the dividends for shareholders, I mean, we still maintain a policy. The policy is to distribute 90% of profit. So we believe we can distribute 90% of profit while paying down debt. So we have several investments that the average shareholder doesn't know of, so or hasn't paid much attention to. So for example, one of them is our shareholding in Kio. Kio is an international fintech company that Supreme Ventures invested in over 3 years ago. 4 years ago. Well, invested originally 4 years ago and increased that investment about 2 years ago. Um, you know, in these sets of numbers, what people might not specifically see is that we have had an increase in that investment year to date. I mean, well, since inception, of approximately 600,000 US, or about 90 million, just under $100 million. We think that investment is going to do significantly well. Our expectation, knowing after discussing with management, etc., is that's a business that's likely to do an IPO sometime in the first quarter of 2026. And based on where we see that investment, we think a lot of the risk associated with Kio has now been removed, and we expect significant growth in that investment. Depending on the valuation on the IPO, we could, if it goes according to plan, we could realize proceeds from that IPO, which would be sufficient to materially reduce the debt load that the group has. That's one. Two, we see where there is continued robust growth in the local lottery business. And then also we have opportunities to expand into different countries. Whilst Ghana isn't where we expected it to be, we continue to work there. We've done a massive cost cutting, and there's also going to be, ongoing cost cutting and cost efficiencies within the group, certainly within the first 6 months of the year. You would have heard we did a redundancy exercise in the end of December last year. We've had some other movements during the first quarter, and that's going to be an ongoing feature of the business, because when you have invested as much as we have in software, a lot of those efficiencies are going to have to drive through the business. And as the business becomes more efficient, then we have to look at what the headcount is saying. So, our challenge is, can we grow the business fast enough to maintain the headcount that we have? If we don't grow the business fast enough, then we're going to have to look at that headcount to make the necessary rationalizations. But the big thing is that we expect material cost savings for this year, 2025, because we have somebody internally that's tasked with driving out unnecessary costs in the business. We're beginning to see benefits associated with that, value associated with that. And, ultimately, I see a material increase in our cash generation, because you're going to have lower costs, you're going to have higher revenues, and ultimately you'll have gains across other investments. So, this should be a very good year for cash generation for Supreme Ventures.
Great. And I want to address some questions online, but back to Guyana before I move on. So you spoke about some cash cutting redundancy exercises, but can you speak a little bit more to market share? Have you increased the market share in Ghana, sorry, I believe you're at about 5 to 10%.
Oh no, we're not at 5 to 10%. we're growing the market share. It's still a tough climb because of the environment there. So they have a traditional 5 in 90 lottery, and so our games there, which is pick one and pick four, is new to the market. So we've spent a lot of money marketing for people to get to understand the pick one and pick four. Whilst our revenues have increased, it's still not where we want it to be. But notwithstanding that, we have looked on different ways in which to expand into other countries. And so, the expansion into Ghana required a certain level of capital expenditure. Since then, the management has come back, and we see how we can make similar expansions without that level of capital, and that with a much lower expenditure profile. And so I think, later on this year, you should see some announcements where that is concerned. And I think with that shift in strategy, it makes penetration a lot easier. So again, that's another area where we expect to see increased cash flows as those penetrations occur.
Okay, and Philip Burgess is asking, when do you expect to see some profits yielding from the SVL Ghana operations, and has a CEO been identified for that segment?
And so for Ghana, what we're moving towards internally, we're moving towards country managers, and so we should appoint the first country manager within the next month, certainly by the end of the first quarter. And so as we move into other territories, we'll do it via country manager as opposed to CEOs. Because what we have learned is that it is better to develop the competency in-house. So you follow better, you have a central command here in Jamaica, and we will manage a lot of things in the different jurisdictions from Jamaica. So, for example, our business in Ghana is fully digital. 99% of our business in Ghana is digital. About 1% is terrestrial. So we have no receivables, etc., etc. So it's just a game of, marketing to ensure people get to understand it, and we move forward. We have been reducing the costs every quarter, which will allow us to get to break even much faster. And so, in terms of the question, we should make a small profit towards the end of this year in Ghana. And as I said, as we look at the new way of penetrating overseas markets, we think we'll get closer to break even for other markets when we enter them.
Okay, great. Thanks for that. I'm seeing a question here from NB Lee. If you're not able to get government on board, what is the future for Caymanas? What timeline do you estimate for that to happen?
Sorry, repeat that question.
Sure, no problem. If you're not able to get the government on board, then what is the future for Caymanas?
I mean, ultimately, you close it. I mean, you see, what people don't understand, live racing in a jurisdiction now is a premium. The business out at Caymanas, we make money on simulcast. We lose money on live racing, right? There are a lot of things that go into live racing that's required to make it profitable. So we can always scale it back to within a number to try. So you have two opportunities to get profit, right? You can save your way to break even or a profit, or you can build revenues to get into profit, right? Because of the structure of what the horse racing industry is, it's very difficult to grow your way into profit because, as I said, it's 365 days of expenses versus 88 days now 80 days of revenue, right? And whichever business you get into, it's difficult to work with that ratio. To get more race days, you need more horses. To get more horses, you need more capital to put into horses. So we started a trial of 5 horses. We're now up to, I think, 13 horses. And, so now we're all of a sudden, as the promoter, we're one of the major owners of, right? And we continue down that road. So we have to continually, one of the things that Mayberry is known for, and certainly in our private equity arm, and public equity arm is discipline, right? And we have done well because we are very disciplined and we understand what we're strong in and what we're not strong in. So from a Caymanas perspective, SVRL is the horse racing promoter. It is not the landowner. It is not the government that has to give everybody all these social benefits. We're a promoter, right? What does a promoter do? A promoter uses different resources to pull together to try and make a profit. So if I'm a horse racing promoter, I am going to try and get the best horses to be put on a track, to run, to make profit, whether by betting, etc. And I go down the road. The reality is that there are many stakeholders who are of the opinion that I must be all things to all men, and I'm not. It's not in my contract. I'm a promoter,
Fair.
right? So there are certain things that, as the promoter, I will do some marketing to try and get people to come to the table. But ultimately, I should only put on activities that I can make profit from. And if I can't make a profit from an activity, then it's not in my best interest as a promoter to do it, right? So the reality is that, as I said, we are being asked no to do certain things that is really not for the promoter to do. I was asked to invest a certain amount of money, which was $500 million. We've blown past that $500 million. And there are other things that needs to be done, which fundamentally the landlord needs to come to the table, right? Stakeholders, they need to come to the table to do certain things. So we have to put forward, so in other words, I can't just increase purses because that's what owners need to make a profit. One of the biggest things that's out at Caymanas that, the various owners, have yet to answer my question. What is the owner subsidy? Every single sport in the world has owner subsidy, right? When the Dallas Cowboys stadium at Arlington, it was built by the state of Texas, and that's a subsidy. In baseball, in football, Abramovich, had $1 billion loan. He subsidized the Chelsea players. So what is the horse racing owner subsidy? What's the amount of money that an owner who is doing this for fun is willing to absorb because it's horse racing? There's owner subsidy in the United States, in Australia, etc. But my local owners are basically making an argument that I should put the purse at a level where every single horse owner makes money. That does not happen in any jurisdiction in the world, right? So I'm not going to be forced into doing that. And, we put up a purse which we think can be funded. And, if it should be funded in a way that at the end of the year, Caymana shouldn't be losing money.
Yeah.
That's the reality, So we have to get back to what matters, which is discipline, which is focus. We are the promoter. And so I've charged a team at SVREL and to remind them that they're promoters. And, if we put in an initiative and initiative doesn't work, then we have to take the tough decision. I'll give you an example. When you look at most horse racing, you see when a horse is on the track, you will see where with a horse moves from first to second, the number below is a change from 2 to 1, etc., etc. It's more accurate timing, digital timing. We invested in it because people asked for it. We were told that if we bring it, we'll be able to earn revenue of X, Y, and Z. We invested. We've done it. It cost us $1 million a month, and we have not received $1 in revenue, right? So I've said to the team, you have to stop it. It looks good. People love it, but we cannot afford it, right? So you're going to stop it. And so they've been tasked with looking at their costs and to rein in their costs and drive their costs to a point where whatever their revenues are, the revenues can cover that, right? And we make no excuses about that because we have 6,000 shareholders in SVL that is looking forward to your dividend to pay their pension bills, pay their school bills, and we can't make one subsidiary pull us down.
Agreed. I think these are all fair positions, Mr. Peart, and I think, the landlord, it's time for the landlord to step up if the landlord is is listing. I believe you said the subsidiary is generating 400 million in losses.
Yes, for 2024, it was about 390 million in losses.
Yeah, so I agreed with you. These are very fair positions, and if the landlord or other stakeholders are listening, it's time. I have a lot of questions here on K-Manors actually, so shareholders are actually interested, which I believe you have spoken at length. So I won't ask any more K-Manors questions. Mr. Berry, do you have a question for Mr. Parrott?
You're on mute, Chris.
Yes, Mr. Peart. How are the revenues in the lottery business going? The numbers from the statin says that we're in a recession. Are you seeing it in your numbers, or you have some good news for us?
You know, I don't know if the lottery business at SVL is a leading indicator, but what I can say to you is that the lottery business for December was very robust. We had some days which were record days in the 20-year history of SVL for the month of December. New Year's Eve is normally our highest selling day, and for the first time in the history, the follow 7 days subsequent, which should have been the 31st actually, ended up being a record sales for us. What I can say to you is that we're in the middle of the first quarter. I have to be careful what I say, but what I can tell you is that the level of robustness
Mr. Peart,
is
it's a public forum,
it,
so
okay.
anything you say here is legal
Yes, sir.
because you're releasing it to the public at the same time.
No problem. Yeah. So what I would say to you is that the robust sales that we saw in December has actually bled over into January and February. And based on what certainly I am seeing from the top line sales and where the sales are coming from, I would be surprised if Jamaica has another quarter of GDP decline. I don't know if it is the road contracts, but the numbers have been very robust um, for January, but and then as I said for February as well. So the lottery business seems to be doing pretty well. I mean, even though we have had I think two Super Lotto winners, but outside of that, it's going well. And what has also been very very encouraging is actually our pin sales. So as you guys know, we are the number one seller of phone credit in the country, and that's a very mature business. And what I will say to you is that year to date 2025, the growth in our pin sales is above the normal mature percentage. So that further adds to the argument about the robustness for 2025. I don't know how widespread it is, but maybe it's a leading indicator. I don't know, but those two lines of revenues, lottery and certainly pin sales, have been have been very robust. And now that we have a remittance business again, for the month of February, our remittance business. I remember we're still a relatively small percentage of the remittance market, but February for us was also a record in our small remittance business. So on the whole, the economy certainly from what we're seeing, and our customers, represent maybe the lower level of the economy, but it seems pretty robust there.
Thanks for
I
that.
have a follow-up question.
Sure, go ahead, Mr. Berry.
Yes, so I've been into a number of bars where they have these so-called video lottery terminals. In the old days when I was a child, we used to call them slot machines, but now everything's gotten a bit fancy. And I noticed several of them have things in them called bill acceptors, which
Yeah.
basically you take some cash out of your pocket and you stick in this machine and you play. Quite entertaining. Now, how do you maintain proper AML, anti-money laundering protocols when cash is being thrown around like this? Would that pass the SVL standard? Do you have these kind of machines in your inventory, sir?
Well, the simple answer to your question is no. So
No to what?
no, we don't have bill acceptors, and we don't have bill acceptors primarily because we want to be in compliance with the AML, the AML strictures. The fact is that the legislation in the country needs to be upgraded because there is a massive loophole in the sense that lounges in Jamaica are required to adhere to a particular AML standard. And for most of these lounges to achieve that AML standard, they can't use bill acceptors or cash acceptors. And so if you go into a lounge, like Acropolis, you go to a cage, you give them the cash, they give you a card, and you play on the machine. From my research, and if I'm wrong, then
No, Mr. Pierre, don't go too fast. There's lots of non-technical people here. So why is it you have to go to a cage and give them the cash there? How does that fit in with AML? Explain.
so the reason for it is that when you go to the cage, if you're new to Acropolis, we're going to have to conduct what you would call KYC, otherwise know your customer. So you're going to have to identify yourself. So you provide identification, etc., 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 which will allow you. So what it does, it makes SVL or the people at Acropolis comfortable that we know who you are and we have an idea as to your the source of your monies, etc. And which is the basis of a lot of the anti-money laundering policies, procedures. So we
And forgive me for interrupting, Mr. Pierre. So this means that in your establishment, some Tom, Dick, or Harry couldn't walk off the road with, say, $5 million
Mhm.
and just stick it in a machine. That you would have his name, you would know that the 5 million came from him, and all the funds are traceable.
Correct. Correct.
Okay.
Right. So the point of all of that is that in any jurisdiction, this is information that you need to have because also it helps to facilitate our banking arrangements. Because if at any point in time our bankers were making enlargements in cash and our bankers asked about it, we can provide the information. So if we're lodging $10 million, for example, we can say this 10 million is amalgamation of, monies from Gary Peart, Chris Berry, Rachel Curlew. This is who they are. This is what they're about. And so the banks will be more comfortable because we have that AML standard. The problem is that there is, in my opinion, there is a loophole based on the research in that in the gaming business, you have machines which are 19 and over and 19 and under. So lounges like Acropolis that has more than 19 machines, you're captured under the current AML regime. Right now, my understanding is that it doesn't extend to locations which are 19 and below. And so in the past, you would have one or two bar owners that own these different boxes. The fact is that the majority of these boxes are owned probably on average by about 10 people right across the country.
And how many boxes are you talking about, Mr. Pierre?
Well, the last official number I saw was in the BJLC was for 2021-22 was supposed to be 12,000. But it's alleged that they're in excess of 30,000 machines.
Alleged by whom?
It's alleged by a lot of people who are going around the countries and count these things. But we don't know who's true. I mean,
So you think that's an accurate estimate, or you think they're just blowing smoke up here, you know what?
I don't know. I based on little I know, I think it'll be more than 12,000. But that's the role and
At
responsibility.
least 20, though.
Well, again, it's the role and responsibility of the betting and lotteries is for them to know exactly because they're the ones that license these machines, and most importantly, they're the ones that's supposed to be enforcing the licensing of these machines. Yeah. And so what you have happening is that, what's worse, the BGLC does not know how much money goes into these machines because the BGLC currently does not have an environment to either track or record what happens with these machines. So the BGLC knows everything that happens with our machines in Acropolis, etc. But for these locally manufactured machines, they charge a fixed fee. These machines don't have recorders for the BGLC to go out and check. So nobody knows how much money is going through these machines. And in addition to that, they don't have AML standards. So, I don't know if the BGLC is comfortable with that, but that's the status right now. They claim that they have been approved to put in a GMIS, gaming machine information system, but it hasn't put in as yet. They're working towards it. I don't know how much longer they need to get it done. But as I said, these machines, I mean, a rough estimate, these machines can generate up to $20 billion. As to how much of that is legal, I don't really know. The BJLC is the one that would need to tell us. But I suspect it will be a risk. What we're doing at SVL is rolling out what we've called our Gold Seal program, where we have almost 1,000 retailers. Some of them have more than one location. And so we're going through a process. It's been over 18 months. We've been spending time fixing this thing. But we want to go through a process whereby we look on certain locations, and once we apply a gold seal, it would mean that everything in that location is auditable. So if, let's say, you have a remittance business, you know that, whether MoneyGram or Western Union, you can always you get a sheet that says this is the amount you've sold, so you can track all the cash in the locations. I think the banks will be happy with that. The retailer should be happy with that. And if a retailer doesn't want to do it, then we won't designate them gold seal, and then people decide what is what. But it should be in everybody's interest to want to be able to be in a position to know that you're AML compliant, everything in your place is auditable, and we go down the road. And we have to do that because we're one of the biggest brands in gaming in the country, and we don't want to be tainted by any of these things. There's some retailers who feel that you might be heavy-handed or high-handed, but they will think that way until when the police who's doing their job finally catches up on some of these guys. That's the point at which you don't want to be held for being in conspiracy with somebody who's doing something outside of money laundering. So some people feel that if they benefit from money laundering, they're fine, but a case can be brought against them as well. And so we don't want to be caught in that position. And more importantly, we don't want our legal minded retailers to be caught in that problem as well. And so over the next 3 to 6 months, we'll be rolling out Gold Seal, and trying to get as many of our retailers into that program as is possible, because it sends a very big signal that any retailer with our Gold Seal is above board. It's not to say that if another retailer doesn't have it, if they can demonstrate that their things are auditable to whichever other person it is, then fine. But if I can't say it, then ultimately I'll have to think twice about them having my product.
Great. I like this Gold Seal initiative that you'll be rolling out shortly. It's always better to be proactive than reactive in this market.
So
I'll take one final question from online from Ryan Purchell. What is the business case for the investment in Dollar Financial, and what percentage ownership in the company is SVL seeking to obtain to satisfy this business case?
That's a pretty good question. SVL currently has 2 microfinance businesses. We have Michaela, which I refer to as our terrestrial business, and we had Evolve, where we have a relationship with an international provider of a credit model that ultimately is moving towards AI. So, Evolve was envisioned to have been all totally digital. Michaela was terrestrial. we had the opportunity to invest in Dollar. Um, Dollar again is run by a very efficient management team who knows that space pretty well. And strategically, I mean, I think where it could probably end up, because our philosophy, as I've indicated before, is to be disciplined and focused. So whilst we're building out an ecosystem, there may come a point where it might be financially efficient for us to roll up our microfinance business with Dollar or vice versa, right? And so ultimately, that's the mindset. You know, there's another view where we're creating a competitive environment. So you have the team at Dollar that has their objectives, their KPIs, etc., and I have the internal team at SVL. So at some point, if the team at SVL does a better job of running and growing that business, then SVL could say, "Hey, Dollar, why don't you roll up with us?" But obviously, if Dollar does a better job, then the reverse is true.
True. Mm-hmm.
What's more important, as far as we're concerned, is that the vision we have at SVL is we have a pretty sizable customer base, certainly from a Jamaican perspective, and the the market surveys that we've done suggest that our customers want more services. They enjoy what we are giving them, certainly from a lottery perspective. But they're seeking other services, and microfinance is one of those services. And a lot of these customers don't qualify for the big commercial banks, and they're pretty comfortable with the Supreme Ventures brand. And we feel if we can help those customers do more and make more, then we'll create more value for ourselves and themselves. And we think Dollar Evolve Michaela is very important to that, because fundamentally these three companies are lending to the unbanked and underbanked to allow them credit. Now, I mean, credit which you and I and Mr. Burgess takes for granted because we have all these things, but
True.
is a lifeblood to create significant value for another segment of the society. So, however we go, whether we make it more efficient between the three companies, one way or the other, the ultimate goal is to create a solution that gives significant value to our customer base.
Great, great. And if or when you do consider that consolidating of Dollar and Michaela, I'd love to tender a bid to act as broker to that to that transaction.
You're an investment banker, aren't you?
To the core. Team, I'm sorry, shareholders. I didn't ask every question that you posed on Kim Manos because I believe Chairman Peart addressed most of them in his responses. But I think we have more or less answered most questions or all questions on social media. So I'm just gonna go ahead and wrap up this segment. Mr. Berry, do you have any last comments before I wrap up? Okay, great, great, great. So just a recap, SVL remains a strong company. It's actively expanding its customer base and serving off offerings, as Gary alluded to. Revenues are at 52 billion, market cap 51 billion. He did indicate that they have received full approval from BOG for the remittance business. He's expecting that to come on board in the third quarter of this year. He signed agreements with major utility service providers. He'll be launching that in the next 2 weeks. So a lot of exciting things happening for SVL. So we can expect more cash flows to come in. They paid out, I want to say, 1.6 billion in dividend payments for 2024, which translates to about a 2% dividend yield. So the stock is trading, it's down, it's at $19 as opposed to the usual 24 23 that it trades comfortably at. But we are recouping funds on the dividend side of it. So I remain confident in the stock, and I look forward to how things will play out for the next few quarters. So I think by Q4, by 2025, things will be turning around. We'll be seeing growth in multiples for SVL. And that's it for today's discussion. I'd like to thank our viewers for tuning in today. Your support is always appreciated. Many thanks to our panelists, Mr. Berry and Mr. Peart. To our viewers, be sure to look out for updates on our virtual investor forum by following us on social media. We share things forum related on our official social media pages. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Keep safe and remember, wise investors, slow and steady, win the race. Thank you.